By the end of this video, I can guarantee you'll believe you'll be able to be funded at least $1 million on futures. All right. So this is my beginner version on how to scale on prop firms. All right. So this is going to be one take, me reading through this whole Miro board. I'm not going to read through every single point, but we'll basically explore what's the math behind funded accounts, what are the scaling method I use or I would use as a beginner. I'll also come out with an intermediate version, but the only difference between the two is that the beginner version relies on high probability of passing accounts, while the intermediate version just wants to like speed things up to get more funded accounts faster, but with a higher probability of blowing them. All right. So the beginner version is cheaper in my opinion, but if you want to get funded fast, you can watch this beginner video, then go to the intermediate way of scaling prop firms. And then at the end, we're gonna shift your mindset and goal set for you to be funded $1 to $2 million on futures. Okay, so this is highly possible. And just with the small material here, I think I'll be able to convince you that you're able with a simple strategy to be funded and scale on prop firms. All right, so I'm not gonna go over what prop firms are, just like the basic trading stuff. This is for beginner traders that maybe have like 1 year of experience. Maybe you traded demo, you traded small accounts, maybe you tried prop firms, but you're not quite consistent yet. All right. So the biggest misconception, in my opinion, is that beginner traders think that you got to get big payouts on prop firms because the capital is bigger. All right. So most people, they try trading with like $500 to $1,000 account. They're happy with getting like their $200 profit for the month. But when they see prop firms with a 200K account or more, they expect to get those big payouts. All right. So what I did is I basically typed on X prop firm payout. What comes up is it's the big payouts, right? The plus 20% on your 200K account. This is probably like plus 45% on a 200K. This is probably a bigger account, but still, you get the point. What you're bombarded with is people getting paid out 50, 40, 100,000 per payout, okay? This is not gonna happen for most of you, especially when you're first starting out, okay? So you're not gonna get this in 2 weeks, but you can get it if you use this method eventually. Once you're funded $2 million, this is very possible, but you can't expect to get big payouts and have this mindset going into it. So first of all, let's explain the biggest difference between prop firms and personal accounts. All right, so your goal on a personal account is to compound your balance. You risk 1 to 2% per trade. As the account gets bigger, you get more money out of your 2% risk. Let's say you go for 1 to 2 RR, your 4% profit stacks up the more balance you have. All right. So this is the basic idea that you're taught when you watch YouTube videos about personal accounts. You compound interest, you just get a bigger account over time. That's how it works. All right. On prop firms, it's completely different. The way to compound is to get more funded capital. All right. So it becomes clearer for you once you understand that you don't gotta compound your balance, you just gotta get more accounts over time. So the real objective, as I said, is not to make a lot of money quickly. All right. So your goal is to make small profits on each account. You gotta keep your account alive. And once you got one account alive, it keeps going up slowly. You get a second account, it keeps going up slowly. You get a third account. By the time you get to your 10th account, that first account is up massively, and then you have 10 times the funded capital, so you can make 10 times more money than your initial one account. All right, so the idea is to always make small profits on your funded accounts, reinvest, get more accounts, and you'll build more funded accounts over time. Okay, so you're not trying to win big. What you're trying to do is stay in the game with your first account and stack more into it. Okay. So now we're gonna get straight into how to start passing accounts. So what you want to do on evaluation, if you're a beginner, is still go with moderate aggression on your evaluations. All right. So let's take, for example, what I do with my negative RR strategy. What I would do is risk about 2% per trade. So my goal is to obviously pass the account quite fast. Okay. So with moderate aggression, 2% risk, you're gonna lose accounts, but it's not that big of a deal. So you gotta expect to fail some accounts. And that's why you don't want to go all in with your first evaluation fees. So if you have like a $2,000 budget to trade prop firms, you can buy multiple accounts with it, okay? Don't buy $2,000 worth of accounts and go moderate aggression on like 20 accounts at the same time. Just buy a one eval and risk 2% per trade. So if you blow them, this is normal and this is part of the math. If you blow 1, 2, 3, 4 accounts, on the fifth one, you'll probably pass. All right. If you use the same strategy, you find a simple, even break-even strategy, you'll end up passing. All right, with moderate aggression. So now, once you've passed, for example, one account, you want to completely de-risk on the account. Okay, so I would go from 2% risk per account to 0.5%. So now I'm just kind of spitting out numbers, but we'll do the math together in a few minutes and you'll understand completely why you need to de-risk on your account as soon as you pass. So as I said earlier, you got to survive on this first account at all costs, get small payouts. If it happens, it will happen naturally. All right. So if you risk small over time, you'll get a small payout on this first account and you want to keep this first account as long as possible. And this is how you'll scale by buying more accounts. Now, there's a line, we're switching section, all right? I'm just gonna start giving example on how you can use maths to your advantage and let the probability play out, okay? So why do you have to create scenarios and why the math matters when you start investing into prop firms, okay? So what will change everything is not necessarily mastering emotions when trading, not lacking confidence in your ability to do it, or not like hoping to get a screenshot like we've seen at the top here, okay? So all of this doesn't really matter, okay? The only thing that matters is probabilities over time, and the only way to do it is to stop focusing on single trades or for example 2 to 3 trades. You're not gonna get far by focusing on high risk trades. What you got to start focusing on is eval to payout cycles, okay? So you want to focus on what we've seen above, moderate aggression, then you de-risk on the live phase, and that's your cycle. Then you start a new cycle with moderate aggression on the second eval, de-risk on the second eval once you pass it, and you keep going. That's what you got to focus on. You got to focus on how much you spend on funded accounts and how much you get in payouts. You don't really care about your trades. You start focusing on buying evals, getting money from a small payout, reinvesting it, okay? So the trades don't really matter, the cycles matter. So I'm gonna give an example with Hypertix. The reason why I recommend them simply is because they're the cheapest 50K account you can get on the market, all right? So the cost per account is $50. The usual, if you look at Top Step, Apex, or other prop firms, is way above $100, all right? So especially if you're a beginner, you're gonna wanna go with Hypertix. I've got the link below, or you can just go to hypertix.com and use code TRADETRIVE to get your accounts for $50, all right? So with that $50, you're gonna get end of day drawdown of 2,125. So you want to go with this account, you're gonna get basically $2,000 of drawdown, and you gotta hit a profit target of 2.5K. So in my opinion, this is a beginner friendly structure, and they built this account specifically for that. So there you go, you got some specs for the account. You can use code TRADETRIVE. It's in between 50 to 55% depending on the promotion, all right? So now let's assume you have a strategy similar like me. You can learn my strategy on YouTube as well. I have basic videos about my strategy. You'll have a high win rate, a very small risk to reward, and clear mechanical rules. So if you're a beginner, I highly recommend a strategy. It has those three criterias. Now, let's say you're a beginner, you haven't really mastered your strategy yet. You get an 82% win rate, you risk $500 per trades on evaluation, and you take 1 to 2 trades per day. All right, so this is a very small edge for strategy. If I use my own strategy, my win rate is between 87 to 92 risk to reward, depending on what the market looks like. Okay, so I'll get months where I'm well above 95%. I'll get months where I'm lower towards 87% win rate. So if you're a beginner, I would start with a mechanical system first to trade on prop firms. Okay, so I would start with a mechanical system first, and why? It's very simple, it's easily repeatable, you have clear rules for yourself, and you limit decision making so you don't get burnt out on trying a very complex strategy. And all you need on prop firms really is to be consistent, and you gotta expect to blow some accounts still. If you drop below your 82% win rate, you'll probably get 90% later. So that's what I mean by consistency, all right? So just do the same strategy. Sometimes you'll dip below your win rate, sometimes you'll be way above, and once you're above, that's when you pass accounts. So let's go, for example, with a $500 starting budget. If the accounts cost $50, you get 10 evaluation attempts. I can guarantee you that you'll at least pass a few, all right? And all you need is one payout to start this scaling process. So for example, with $500, you can easily, with the strategy above, get a $2,000 payout, all right? And this is when you'll start your scaling process. So what changes on live accounts once you're on live funded? As we explored earlier, once you're funded, you have to de-risk immediately, and this will go from, for example, $500 risk to $250 risk. This will in turn increase your payout probability on the first one and your account longevity, so you can keep it alive and then focus on scaling other accounts. So at this point, you're no longer attacking, you're protecting your capital. All right, so this is kind of what we went over a bit earlier. Now, once you get that locked in, that was like the risk management side. This is the scaling process for me. You buy one cheap account, you pass some, you fail some. You'll have 10 bullets with $500. On those that you pass, you de-risk live accounts and you take small payouts not to overstress your trailing drawdown. You reinvest into new accounts, and over time, you'll increase funded capital so you can repeat the process. Moderate aggression, de-risk, payout. Okay, so the idea is to not compound money on a single account, you're compounding multiple accounts. Now let's see what this scaling strategy will look like over time. And that's the part where you'll start believing that it's in fact very easy to get funded $1 million. So if you have multiple live funded accounts, you can get payouts in between 500 and 1.2K fairly easily while keeping the accounts very low risk. So while the new evaluations are passed, what I meant by this is like the same thing we said earlier, right? You pass your first eval, you keep the account alive, you almost forget about it. You'll pass new evaluation as you build for your payout. Okay, so the risks per trade will stay minimal. Okay, so let's zoom out a little bit. You have already your first live funded account. At the top here, you take a $500 payout once your balance is around 2.5K. What will happen is by the time you're trading this first funded account, you'll start adding account number 2. You passed a second evaluation and you took your payout. So that's basically the cycle we explored earlier. Just with that first account, you got your first 500. By the time you get your 2 accounts running at the same time, your payouts are already $1,000. All right. So if you repeat the cycle 8 times, each time you get a $500 payout on the first one, each time you get a $500 payout on the newer ones, you're going to get bigger payouts on the first one because you're actually more into profit. So let's say here you'll get $1,000, this here you'll get 800, right there you'll get like 600, and on all the newer accounts you'll be able to get 500 on each. Okay, so this is how you get to bigger payouts. You just stack accounts by following the cycle above here, and eventually you'll get your payouts up to 7,000, 10,000, 20,000. All right. So what should be your mindset when coming into this and try to scale on funded accounts? You first got to understand that with cheap accounts and easy rules, you can just execute a mechanical strategy, and over time you'll just get your payout naturally. All right. So buy a bunch of cheap accounts, you'll have higher probability of at least passing one. You'll get better stats if the rules are very easy. With minimal risk, you don't gotta worry about prop firm rules that much. And you'll have predictable outcomes over time, okay? So if you just execute the same strategy every day, this is very predictable and you'll get this many accounts over time. It's almost guaranteed. So now, if you invest your $500 into a prop firm, you can estimate expected returns based on your backtested percentage of winning, all right? So with this strategy above, you can easily estimate how much money you'll make with 80% win rate, for example, 0.3 RR. With this, you can just calculate how much money you'll make. You can even ask ChatGPT to run through a simulation using, for example, the hypertext account rules. And you'll see that it's very easy to scale if you go moderate risk, and then you go down to de-risk your account. Okay, so you gotta think in expected value. You gotta think, if I invest $500 and my results match my back testing, like for example, what we saw is 82% win rate with 0.3 RR, you can easily estimate your expected returns over time. You can run a simulation through ChatGPT, and you'll see that it's very easy with moderate risk to get at least one account funded. And once you de-risk, you'll eventually get your payouts. You'll be able to increase your live funded accounts, lower overall risk, and you'll be able to stabilize your income as you get more accounts. Now, my final perspective on what we saw today is that prop firm scaling should not be aggressive when you're a beginner. Even at the intermediate level, my approach on live funded accounts are exactly the same. But if you're intermediate, you can be extremely aggressive on evaluations, but I would still de-risk during the live funded phase, all right? So it has to be born repetitive and systematic, because you're not compounding interest on your account. You're building funded accounts one at a time, and you're trying to survive on your first, then on your second, then on your third. So by the time you have 20 accounts, those first two accounts are still alive, all right? So you got to use the same edge with a simple strategy. I have some resources if you're not there quite yet. If you're a beginner, you struggle to pass evals, but you know for a fact that you have a profitable strategy, you just got to repeat your same edge again and again. And over time, you'll build that capital, and your payout's going to look like this. You're going to get small payouts on each account, and you're going to end up getting those nice screenshots if that's what you desire, or you're just going to get that money inside your account. All right. So that's basically my blueprint on how to scale on prop firms. Once again, I'll recommend those hypertext accounts. So you can get started with $50 per account, or a bit above if they're not on sale. All right. So you get basically a bit above $2,000 worth of trailing drawdown for only $50, and with $500, I can guarantee you'll get to 1 million funded pretty easily if you just reinvest your payout, stay patient, and let your edge play out. So I got an intermediate version of this video on if you want to be more aggressive on your evaluations. And I also got some other resources to create your strategy if you're not even at the beginner level. If you're completely clueless on how to trade, I got some resources for you to get a strategy that will look like this. All right, so make sure y'all smash the like button and watch those other resources of mine on my YouTube channel. See you, everyone.